Welcome back to ALECA Talks. I'm Serge, your host for today, also known aka the Boring ESG guy. Today, I'm joined with Luc Janssens, co-founder and director of Mercantile, an accounting and advisory firm supporting startups, scale-ups, growing businesses across the UK and Africa, actually. Luc's journey has taken him from South Africa to London, where he qualified as a chartered accountant with, I think, BDO, before leaving the traditional accounting path to build his own business. And this Aleka Talks is all about leadership and entrepreneurialism. So please welcome Luc, and we're going to talk about his entrepreneurial journey and Mercantile as well. Welcome, Luc.
Thank you so much, Serge. I really appreciate it. Thanks for having me. I'm very
Oh,
excited for today.
great. It's our pleasure. I know you've been busy and it's been hard to grab you in your schedule, so I appreciate your flexibility. Before we dive into Mercantile and the future of finance, I'd love to start with your story. One thing that stood out during, we've met a few times now. The prep conversation was being an entrepreneur and how consistent that's been a consistent thread throughout your career. Can you take us back to the beginning? What first sparked your interest in becoming an entrepreneur?
Well, I think I've always been quite a curious person. I think maybe to the detriment of my parents growing up. I think I was always that kid that asked the infinite whys, and was always, like trying to sort of feel the room and understand how things work. And I think as I sort of grew up, that curiosity stayed with me. And then I sort of got into this, you know, like of what I call value transactions and trying to understand how those work and essentially, how, a 1+1 = 3 relationship or, something that someone desires more than something that they have and how they can exchange that for, value for someone else. And then that sort of linked back to the numbers behind it as well and understanding more of the finance behind how those value transactions work. And that all kind of led to, business as a whole, right? Because at the end of the day, the finance behind a business is essentially the backbone. And the value transaction behind a business is how businesses grow and work. And then I think, at university, I had an opportunity to explore that in a sort of more real way, where I, was involved in entrepreneurship society. I set up an incubator at my university, and try to help sort of showcase the startup ecosystem within my university and got quite involved in that. And then also on the side, while I was studying, I did accounting and tax and advisory kind of work for a few startups in South Africa. So that kind of was in parallel with my accounting and finance studies. So that got those sort of entrepreneurship juices flowing. I got to understand how businesses work from inside. And obviously met a lot of founders and had a lot of conversations and understood how they built their businesses, etc. And yeah, then moved to the UK, had an opportunity to come to London, qualify as a chartered accountant. And yeah, just sort of continued that sort of curiosity and I have quite a few founder friends. And when I decided to resign, I had a lot of conversations with them, few coffees, few drinks, just trying to understand what their journeys were, how they sort of shifted from sort of like corporate or even moving from a different country into the UK, set up their businesses. And from those conversations, it kind of makes sense for me to do it myself. And then I just took the leap, kind of figured it out. And yeah, we kind of just been growing every day. Met my business partner and yeah, we've just been scaling ever since.
Very cool. Like you say, you took the leap, but the leap kind of started. You're South African, and now you're setting up in London. Talk to me about that professionally, personally. Taking a leap into being an entrepreneur is one thing, but doing it in another country is a whole other level. What do you think that? What do you think the challenges were?
Yeah, it's actually a good point. Sometimes I don't really think about that. a few days ago, someone mentioned that to me, and I was like, oh yeah, that is true. I actually, I'm not from the UK, even though I've been here for, maybe 4.5 years. In a strange way, it felt sort of right and natural. I think I had a real sort of pull towards doing this. I didn't quite feel right, um, in my previous job, and it's got nothing to do with that specific business. It was just more, it just didn't feel like this is where I need to be and where I'm like, can provide the most value for others and utilize my best skills, right? Um, so yeah, I think the challenge definitely is obviously understanding the market, um, understanding, the culture as well. South Africa and UK have some parallels, and that's why there's a lot of, bilateral trade and a lot of history between the countries. But again, the UK and London specifically is very, very different to South Africa and other places where we might be doing some work. And I think, yeah, just understanding the people, understanding how they work, understanding, that in the UK, for example, your sales cycle is going to be a lot longer, right? Than places like maybe America or South Africa, where it might be a little bit more transactional as an environment where people are more willing to try new things, and test things out. Where in the UK, I think people are, you know, take a little bit longer to decide, but then stick with that decision, right? And like the sort of legacy of, and not as, quick to change things, right? So once I understood that, it kind of made sense, and it's really about building that trust, building that relationship over time. That it might not be as quick as a sales cycle, but the longevity of that relationship is where the value is, right? So it's less transactional, more sort of relationship driven. So that was sort of a big point that I sort of yeah understood over time. Um, but yeah, I think besides from that, I guess it's just making the most of where you are. I think that's the most important thing. It's the mindset, right? I'm here. My family's not really here, so it's just about taking opportunities and making the most of my life here, and taking opportunities here because it's an incredible market, the UK, especially London. There's so much going on. There's so much capital being raised here. There's so many businesses being built here. And it really is like a hub in the world. So I'm super grateful to be here and to be able to build something in this space, but still have that relationship with South Africa. And, our back office sits in South Africa. So we are still connected with South Africa and do some work in South Africa itself. And we definitely see Africa as a market for us to scale into, more as we grow. But yeah, for now we just enjoying the journey.
Well, so you say we because often when you start up, the most important part is the relationship with a co-founder because it can be quite a lonely experience starting a startup if it's a single-led founder. But you have a co-founder. I think what's your business partner's name? Antonio?
Antonio, yeah.
Yeah, so Antonio and you joined forces. How is that relationship? Do you feel that you fuel each other? And is it a very common goal, I guess, as co-founders? You're on the same wavelength?
Yeah, I think that is a hugely important point that you just mentioned. The on the same wavelength, the same sort of goal, the same sort of direction. That is core, and that's not just a co-founder thing or a business partner thing or a top sort of management thing. That is a company wide thing. Like everyone needs to be aligned in the vision, in the direction of where the business is going, because you then able to feel each other, right? And
Yeah.
the beauty of the relationship with Antonio and myself is that we are very different as people, but share a lot of the same values and, as you said, like the same direction and vision for the business. So we are able to, one, cover each other's blind spots. We are able to play devil's advocates for each other. We're able to push and pull to find like the happy medium. Um, we are able to be in two places at once. There's so many benefits to having a partner along the journey, especially when you're going through the super lows, whether it's like emotional or financial or as a business. You really are able to like hold each other up and sort of continue the fight forward. Because at the end of the day, as long as you just, keep ticking along, you keep moving towards that direction, you're going to get there in the end, right? And it's just about, being each other's wingmen, and just supporting each other. I mean, that's the most important thing, right?
Yeah, I like the fact that you can cover each other's blind spots, so you don't have the common skill sets. You kind of have complementary skill sets. That's important too. You can't be both thinking the same thing and providing the same expertise, otherwise you're gonna have gaps. So that's kind of
Yeah.
important.
So
That's
so we
pretty
we we both come from we both are chartered accountants. So we met each other at the same firm. So we come from in a way, a common sort of technical skill set, but also have different like additional skill sets that I don't have the same as him, and he doesn't have the same as me. Or he's not at the same strength, right? So that way we enable each other to really like bring the most out of each other, which is it's been brilliant so far.
cool. So Mercantile, let's talk about a quick overview of Mercantile, what you and your partner and your team do. What would you say Mercantile's strength with your clients?
So we see ourselves as that finance partner as you're scaling your business. So although on paper we might seem like an accounting firm, we are a lot more than that. We really are there to help business owners scale with financial clarity, to understand the financial aspects of their business so they can make better decisions. So in terms of how that sort of service is delivered, it's your sort of core finance function work, your accounting, your payroll, your VAT, your tax, your compliance. But above and beyond that, we really go and our advisors, right? We will sit down in those core decision sort of periods, year end, quarters, understanding, what is the goal of your business, what are the levers that you can pull sort of this quarter to maybe reach that by the end of the year. You've got spare cash at the end of the year. Are you paying off a loan that you had, or are you hiring new staff? What's gonna move the needle more for you, right? So it's less about sort of the traditional accounting, which is obviously historical looking back, but it's more of that sort of finance part and looking forward. How do you scale your business? How do you put the right systems in place? And as we sort of scale our own business, we've been able to incorporate more and more services and provide a lot more value to our clients. And one of those is, helping with the raise, whether it's introductions to our investor network, whether it's helping with, making our clients or people that are raising more investable, looking at the pitch decks, looking at the financial models, helping in that aspect, being that accountant in the room if investors need to speak to them about the numbers and clarification over those. And then it's sort of gone towards more, how do we provide sort of tailored software and API bridges to our clients? How do we help sort of showcase their financial data in a clearer way for them to make better decisions? And that's using technology. So we've really sort of seen AI and sort of technology forward as a business. And we've built a lot of internal processes that enable our team to be lean, but also service a wide range of clients in an efficient way. And we really are sort of looking at the traditional accounting practice very differently.
Okay. Okay. And you've mentioned that you maybe are building or have a pipeline into an investor network. How do you maintain that? How do you build it and maintain an investor network? Do you feel that that's growing for Mercantile?
Yes, I definitely think it's growing. I think the raise is an important part of a sort of startup journey. We believe that it should be something that fuels the business that is already working. We're not really of the belief that you need to raise in order for the business to be successful. So in terms of clients, we really focus on businesses and startups that are to its core, a good business, and we can, help them scale by providing the right systems and services. And then that raise is to really fuel that fire and scale that, right? And in terms of that element, obviously investors are super important because they the one side to the other side to the coin, right? You've got the businesses and you've got the capital, and it's how do you merge those together and in a seamless way. And from our investor network, how we sort of maintain it, it's a lot of it is relationship based. We've built it over many years. A lot of it came from internal networks. Um, and me personally, I mean, when I have calls with people or meet them in real life, but I always love to ask, so who else would you recommend that I meet? And vice versa. I always ask, who would you like me to introduce you to? What are you needing? Maybe I've got a few people that can be of interest or help you. And it's really about asking those questions and trying to create the spider web of, I speak to you today, Serge, and then you introduce me to two other people. I speak to those two, they introduce me to another two, and within 2 weeks I've met 10 investors, for example. And then it's really about understanding what that investor's criteria is, what do they need, who are they looking to invest in, and why, and then capturing that context and then applying that to all the startups and clients that we work with that are looking to raise, and marrying the sort of founder or startups raise needs to the investor's criteria, right? And if we can do that successfully, well then, we're able to provide those startups with the capital, and we're able to keep the investors happy because we are able to connect them with the right people that they are looking for, because we are asking the right questions. We're really understanding what their needs are. And from the startup side, we're able to help them fuel their business and hopefully scale.
Yeah, I agree. That's great. You say, there's that relationship. It's almost like a referral network. People still do business with people. People want to trust other
100%.
people, and that referral network is so important, especially when you're starting to grow your network. So I like that. And yes, ALECA will be referring, Mercantile, and there's so many people that come on the podcast, and we're meeting so many good people, interesting people. So we're growing our network, and now we're working with you. So we're looking forward to that. Um, when we met a while back, you had mentioned kind of a three market strategy. Do you remember that? Would you want to explain kind of what that looks like again for the listeners?
Yeah, sure. So I guess it all kind of comes down to sort of understanding the world we live in, and understanding that, you have to be able to adapt to new technologies, to new sort of world circumstances. And obviously one of the most prevailing ones at the moment that is disrupting sort of every industry is obviously the improvement of AI, and adjacent technologies. So Renant and I, we often do this. I mean, it's important, I always recommend you, especially from a founder or management level, to really understand how your business is operating now, what are its sort of threats or enablers based off the sort of current circumstances, and then see how you can adapt the business. So we have these conversations quite often, and obviously AI being something that we see over time sort of reducing the cost of a lot of things, because as something gets easier and more efficient to produce or service or create, the cheaper it's going to be, or the less that the market is going to demand the price for. So, that's, targeting our sort of core business, which is obviously working with startups on a retainer basis, and our clients that are, needing all of these accounting and outsourced finance function services. And over time, as it gets more efficient and quicker and easier for us to service them, they're going to demand a cheaper price, right? So we've already sort of factored in that cost into our business model, and we're able to service clients at a very cost efficient price. But above and beyond that, we've said, okay, call that the middle market, right? So now we look at the UK. There's about 5.7 million businesses in the UK. I think the average headcount is 16, if I'm not mistaken, but the median is 1, which means probably about 85% of the businesses in the UK are one-man band. So, let's work within the market. So on the lower end, we've now sort of built a separate part of our business where we're able to do annual accounts and corporation tax at a very, very cost efficient way for clients and very quick. We've built systems that can automate a lot of the process. And that part of the market is very easy to systemize. Whereas the sort of middle market where you're working on a lot of scaling businesses, there's a lot of edge cases, right? So a lot more of my time and Tony's time gets fed into that. Whereas on the sort of annual accounts corporation tax side, it's very easy to systemize that. And every single business in the UK has to do an annual account and a corporation tax. So, you're capturing the market there, right? And then on the sort of higher end, where, with this thesis of as things get more efficient and cheaper to service, the costs will reduce. We're going after the sort of bigger businesses, the SME size businesses, guys who have maybe broken the bounds of a Xero and a QuickBooks sort of accounting system, and we're actually building out ERP systems for these businesses, understanding their business flows, understanding their SOPs, understanding the different cycles of their business, and building the actual accounting infrastructure for them so that they can scale into that system, and add on modules, add on specific softwares, specific data aggregation tools to basically create their own version of a Xero, essentially, for sort of bigger businesses that need more tailored accounting system. So that's obviously on a much higher end, and it's more of a project-based service. And a lot of that work's actually starting in East Africa, funny enough. So yeah, we've able to go from that middle market, which was essentially most of our business, to creating a lower end and a higher end, where we have to capture more of the market, but also protect ourselves from the sort of shrinking middle market, where these retainers are going to get cheaper and cheaper over time.
Understood. So the businesses, the opportunities are there, but you got to be able to be price competitive and automated, and have that layer of I guess revenue for Mercantile. Mercantile, you still need revenue every year in order to meet your costs, and you've got a plan on how to do that, right? So that was always good to hear your three-part strategy there.
Yeah, 100%.
You have a back office, I believe. Is it in South Africa?
Yes, in South Africa.
Okay.
Yeah,
So you're able to control your costs, because London is not a cheap place, as you know. It's one of the more expensive places to live in the world. I don't know what its ranking is, but London as a city is pretty expensive. So to manage your costs, you got to be able to have a team support you from abroad. But most of the work is there, and people do business with people, so you got to be there. I
100%.
appreciate that. I appreciate that. And you said East Africa. What's the deal with East Africa? It's not South Africa, it's East Africa. How did that come about?
So again, I think another thing is just taking opportunities when they arise, and sort of follow the thread, as I like to say, and see what happens. So that's essentially how that came about. We are working with a private jet fund that deploys private jet into sub-Saharan Africa. And our sort of role is to come into their portfolio companies, understand their sort of accounting and finance function, and improve it, improve the systems. We've brought in sort of inventory management tools. We've digitized a lot of the processes. And I guess the end goal is to provide better data flow from the SME to the fund, so the fund understands, where their portfolio companies are sitting, whether they need more cash injection, are they meeting debt covenants, are they meeting all their KPIs, and shorten that lag between the fund getting the data and the SMEs being able to produce it. But at the same time, helping them scale their business, right? Meet certain revenue targets, And you can only really do that if you know where you are, and you understand what's happening. Um, so to be able to provide that service, and then it sort of scaled from there. Once we sort of got into the region and had sort of boots on the ground, if you will. It's all about those relationships, having those conversations with the SME owners. You know, some of these guys own two, three businesses, and their friends own two, three businesses, and there you go. You've met two guys, and you've got potential six clients of a larger scale, right? Because
Yeah,
these are more sort of agri manufacturing businesses, right? So it's a lot more there's a lot more going on, right? There's a lot of staff, there's machines, there's massive factories, uh, and massive distribution. So it's a different challenge, but it's exciting.
I imagine like East Africa, you think of a lot of high growth opportunities from the local market is growing to their export market is growing. And what would you say the biggest difference is between, financial infrastructure or supporting a company in East Africa versus a company in London, a startup in London versus a startup in East Africa?
Think I just think you know Africa in general is very underserved. And if you're comparing infrastructure, if you're comparing sort of financial systems as a whole, it's the UK and Europe are obviously far more ahead and more advanced. So in terms of what we can do, uh, you know more sort of marginal improvements in businesses in East Africa create a lot more value for that business than if we were going to do the same sort of improvements in the UK. Just purely because the starting base is a lot higher in the UK. I mean, startups in the UK have incredible access to a lot of software and it's like Wi-Fi, for example, like little things like that that you might take for granted. That if you're not like involved in the region, you don't quite understand those challenges. Um, so yeah, I would say it's definitely an infrastructure thing, but I think that's been coming for years, and it's been a problem that a lot of people are trying to help solve. Um, but it's definitely still an issue.
Yeah, so I think, you might have a great idea in a developing nation, but if the infrastructure isn't there to provide reliable, scalable energy or reliable, scalable internet bandwidth, everything's always a challenge if the infrastructure's not there. But you might have a great idea, but you can't grow. So I see that kind of challenge. Now, how about when it comes to ESG, something very close to ALECA here, environmental, social governance, sustainability, energy efficiency, being transparent on your sustainability initiatives. Where do you think do you think first, do you think investors' attitudes towards sustainability has changed in the last few years?
Yeah, definitely. I
Okay.
think I think especially the European money and the DFI money, which is a large proportion of the money that's being poured into Africa. ESG is sort of baked into that capital. Um, and I believe that ESG or ESG adjacent is important. I think companies should be thinking about how they contribute to the wider community, how they're contributing to their staff, making sure that their businesses are run with the correct governance. Obviously we all have a responsibility to take care of our environment for the future, etc. But one thing, playing a little bit of devil's advocate here, is I can see that in a way it's kind of become a little bit counterintuitive from a capital deployment perspective, because in a way ESG kind of is gated because uh you know the sort of core businesses in Africa, the agriculture, the manufacturing, the mining, those businesses just aren't like naturally as a business model conducive to like strict ESG rules. So you really have to do a lot of work to be able to meet these sort of ESG rules sometimes, and that often delays the capital injection into businesses that need a lot of capital, right? These are some of the most capital intensive industries that tend to delay capital because of certain rules, right? And I think it's just about how do you tailor these these rules to these industries that are super important for the region, and in a way that maybe isn't as comparable to like where these rules are being created. Because a lot of these rules are coming from maybe Europe or America, where it's very different to how things operate in an Africa or in other like developing countries sort of
Yeah.
environment. And I think education on both sides, education for, if we're going to use Africa as an example, for the African businesses, the SME owners, understanding, what is ESG, what does it mean, why is it important in general, and then from the advisors, the guys who have baked their ESG into their capital deployment, understand that you're not working in Europe, right? And the most important businesses in these regions, like Africa, you're gonna have to move these rules around a bit to play the game with them, because these are the industries that need it the most, the capital the most, but they also they're not so clean energy businesses or service based businesses. These are hard physical businesses with big factories manufacturing lots of staff, working in like sometimes like very intense environments. uh yeah so it's interesting. It is very interesting, but it's definitely become a very important point when it comes to the deployment of capital, the ESG question.
I agree completely. You need to tailor it for the country, benchmark for the country, benchmark for the industry in that country. You can't be bringing rules from a nation that's been at it for 100 years
Yeah,
to a nation that's just starting. So I think that it's got to be a fair view of things, and ESG is probably one of the most misunderstood topics. Really, it's about being transparent. You're never going to be perfect with it, but by being transparent, you can make a game plan. And most often, all the countries around the world have, goals for 2050, goals for 2070, 50 years from now, 30 years from now, they have a goal of being at a certain spot. And I think that's more important, that you recognize the lay of the land today, and you're working towards something. So that transparency, it's not about applying, it's not a cookie cutter, one one shoe fits all, not at all. So you got to be tailored. It's got to be tailored. And I'm excited that all countries are trying to implement something. But it is difficult with foreign investment when it's coming from often Europe or the UK.
exactly.
They're expecting a certain level, but they shouldn't be. It should be tailored to the country and the industry you're investing in. So I like that. So you look at mining, of course, Africa. When you think Africa, the big growth sectors: agriculture, mining, manufacturing. These are growth sectors. Um, what do you think, if you were leading, the ESG effort in these countries? What would you implement? If I could ask, what would you implement to kind of raise the profile?
I think
Put you
immediately I'm thinking,
Putting you on the spot, Luc.
yeah,
I'll
no,
get
no,
you
fair
to think
question.
about it.
I think immediately I'm thinking, it's about collaboration, it's about education, right? It's about for the businesses on the ground. It's one, getting the owners to understand why it is important for them and their community, right? Put it into the perspective of them and their situation, right? Their community. Don't impose anything on someone. Like, this is just a basic human thing, right? Like if someone imposes something on me, I'm more likely to say no to it than if someone said, listen, like, let's work together. It's in your interest because of these reasons that are specific to you. It's in my interest because of these reasons that are specific to me. We have like common ground. We both like want this thing to work, right? So I think it's really about the framework, or sorry, the framing, and about the education of, well, yeah, educating the importance or of this. I think that's the one part, right? Then the second part is, I think, sort of start with what you can, right? So ESG, start with the S, right? A lot of these businesses can do a lot of the social stuff, right? Fair environment for the workforce, like ensuring helping the wider community, right? Like a lot of these businesses that we work with, they do a lot of things for the community, right? Because it's like in Africa, it is all about community. So let's let's start with what you're good at, right? The F side. Then maybe the governance, right? That comes down to maybe again maybe more education, more framing, more sort of understanding the core business and how it works. And then sort of the last bit is the environment, which is maybe the more, let's say, sticky one, the one that, you might be playing a little bit of a losing game there, depending on the industry. And then it's about just marginal wins, right? So if you can move
Yeah.
the needle, uh, even a little bit on the E, but you're doing really well on the S and the G, like that's good enough, right? And that's already made a positive change. So I think, yeah, again, it's not, you can't go in with this cookie cutter and like this enforcement of like, you need to meet these rules. And if you don't, we're not going to give you capital, right? Like, it's just not going to work. It's not going to work for either the fund or the people that need it, right? And it's not going to help move towards the goal of why ESG was created. Because, you know, you, you need people to sort of get on board because they want to and it will benefit them in order for it to work, right?
Yeah, you want it to be seen as a positive thing for their community, for their industry, for their country, and it'll lead to more investment, which everyone needs more investment. So
Exactly.
it's really got to be seen in a positive way, not in a stifling way. It's got to be seen as this can be a positive thing, and it's hard to frame it that way sometimes. But yes, I agree completely. Start with community. Most companies get involved in their community, especially the agriculture, mining, manufacturing. They rely on that community. So they give back. They do. So if I were to look at it from a kind of a 5-year point of view, from Mercantile, from your industry, where do you see the vision of 5 years from now for you? And I know you like technology. You said AI, embracing it. But what do you see in the next 5 years here for Luc and for Mercantile?
Sure. Um, yeah, it'll be interesting because I feel like it's getting more and more difficult to predict things. I used to be a big planner, uh, sort of, I mean, pre-COVID, I guess. I think COVID sort of knocked everyone off their porch a little bit. But yeah, I think, you know, one, sort of growing these three pillars of sort of our strategies. I think really capturing more of the UK market from a annual accounts perspective and trying to become, a go-to place for like business owners and one-man band to get accounting advice and compliance and filing done. Um, and then from a sort of startup space, we really see ourselves being that complete finance partner, right? That almost business services, right? Not just finance function. It's like you can come to us for, legal, uh, corporate services, um, things like that. Where at the moment we kind of play that role. I always joke we play that sort of quarterback role. Clients will come to us and be like, Luke, we need help with this. And we'll be like, cool, we don't do that internally, but I know three guys, here the email. It's like, here's the intro, done. And we work with a lot of partners. with adjacent services, financial advisory, wealth management, like insurance, all that kind of stuff that you would need as a business owner, right? So we're very aware of like how do we, retain the trust and be that go-to person for our clients and business owners in the UK and wherever else we'll operate. But continuing on that thread, it's like how do we, encompass more and more of that? I think one of the sort of more exciting parts that we are scaling towards and something that I would love to get involved in is actually becoming our own fund within Mercantile. So, as I said, we do a lot of introductions, we help with the raise, but again, it's not our capital, right? It's within our investor network, people that we know, and businesses are always going to need capital, right? And if we can provide the capital to our own clients, where one, we understand the business, like fundamentally, we have all the data. Two, we understand the founder, fundamentally, we know them, we know who their mom is, etc. So we can really make a very, very calculated decision on this founder and this business together makes sense to fund. And I always use the horse and the jockey, right? If you're going to be horse betting, you need to understand who the jockey is. You need to understand the horse and whether that jockey and that horse combination makes sense. So we understand the jockey, the founder, and we understand the horse, the business. And then deploy that capital, right? And then not only that, we almost de-risk our investment in a way because we're providing the finance function services. We making sure they're not buying yachts and, spending the money. We are helping them deploy that capital in the right ways. We can monitor them. We have full access, live data of everything. And it really helps us enable the scale or scalability of our clients. And that's what we want to do. Finance partner for scaling business. And then another aspect, which I think my business partner is like the most excited for, is being able to provide custom finance software for clients, right? So tailored to them. For example, we're bringing out a POS system for one of our businesses in East Africa, where they are able to track sales and plot distribution routes to all of these sort of informal shops that they distribute to in Tanzania, and that data gets collected back to the business, and they can understand, how often do they need to make those trips? Do they need more reps to that vendor, etc. So there's a lot more like data. There's a lot more decision making that can be made. So really, I think improving on that sort of software side. But we don't really see ourselves becoming a SaaS business. It's more about how do we make businesses understand their business better from a finance perspective? And that's the sort of direction, that's the vision, and everything we do kind of revolves around that. And it might change, it might evolve, it might improve, but it's with that whole sort of direction. And other than that, I mean, like scaling to different countries, exploring more East Africa, Sub-Saharan Africa, scaling to Europe, scaling to America, and really becoming that place where if you're a business owner or a founder and you wanting to scale, you need that finance partner along with that journey, whether it's compliance, whether it's understanding how your business works, whether it's trying to raise investment, like we are the guys to go to.
I like it. That's a great vision for the next 5 years. I wish you luck to be the finance partner, the scaling aspect, maybe to be your own fund and be able to help companies grow because like you say, it shouldn't be the business model. You don't need the money to have a business model, but you have a strong business model and you need the money just to grow. And I think that's an important distinction for scaling up real companies. Luc, it's been great. It's been great. I thank you for your time. You've shared the entrepreneurial journey. You've shared your views and your time. It's much appreciated. And thanks for joining us today on ALECA Talks, Luc.
Thank you so much, Sid. I really appreciate it.
All right. Well, we look forward to maybe talking to you in the future. And everyone listening to the podcast, thank you for joining us on ALECA Talks, and we'll catch you on the next episode. Ciao for now.